Welcome to the AACFB's 2021 Meet the Funder webinar series. My name is Monica Harper. I'm the Executive Director of the AACFB, and I'll be your host today. Our presenters are Chuck Brazier and John Hollander from TradeRiver USA. TradeRiver USA is both a funding source member and a gold sponsor of the AACFB, and I'd like to thank them for their support of the association. Before I introduce TradeRiver, I'd like to go over a few items to make this webinar more enjoyable and informative for everyone. During the presentation, you should see a Q&A box that allows you to ask questions. If you have any questions during the presentation, please submit your questions in the Q&A box, and they should be answered by the end of the webinar. The entire webinar should take no more than about 30 to 45 minutes. For those of you who would like to review the webinar at a later date, it will be posted on the 2021 Meet the Funder page of the AACFB website and will be emailed out to the AACFB membership. At this time, I'd like to turn it over to John. It's all yours.
Thank you, Monica. I really appreciate it. And thank you to the AACFB. And I would like to thank all the partners, TradeRiver partners, and all the non-TradeRiver partners and potential partners that are joining us. I'm going to be screen sharing now, but we will, so we can kick this thing off. There will be an opportunity for you all to ask questions. That will be in the I think in the lower section of your screen. So this is the AACFB Meet the Funder for TradeRiver USA. Myself, I'm the Director of Business Development. Chuck is our Executive Vice President. And to give you a little bit of background, as Monica said, TradeRiver is an AACFB funding source member. We've been part of the association since I think around 2013 or 14. We're an AACFB annual gold sponsor, and really the core of our business is equipment lease and commercial finance brokers. Who we are, TradeRiver was founded in 2011 in the UK and 2013 here in the US. We funded over 500 million in client transactions and over 3,000 transactions transacted and funded on our platform. We have a unique trade finance platform, which has been recognized by Great Growth Finance Awards in 2019, and I believe in 2017 and 2018, as well as Direct Lending Platform of the Year. So the platform is unique and well recognized as an innovative tool that our clients can use. We're very passionate about helping small businesses grow. We work exclusively, almost exclusively, let's say, with partners, and we're client focused. We are a funding program for A, B, and C credit levels. We're a funding solution that bridges the cash conversion cycle, or the accounts receivable through accounts payable cycle. We have an very experienced management team in international and domestic trade finance, and the products that we offer are really a streamlined digital transaction platform, a fintech platform that streamlines the transaction process between our client and their vendors, their sellers anywhere in the world. We offer on that platform, we offer trade finance. You can refer to it as supply chain finance. We fund really the entire length of the supply chain, from the very earliest deposit to your supplier, to your client's supplier, all the way through to the final receivable payment from your end buyer. We do purchase order finance. We do receivables discounting, which is usually in conjunction with our purchase order finance program, or buyer program as we call it. And we do work closely with banks and factors who participate many times a bank or a factor will come to us and look for us to do the early part of their funding needs. What the opportunity is, and this is a very important thing to understand as a broker, is that in 2019, 26.31% of US GDP was trade between US and other countries and domestic trade. So there is a huge opportunity in terms of using our product to fund the supply chains for clients that are purchasing product from a vendor and selling it to an end buyer customer. So it's business to business trade, and it's a massive, massive market. US and Canadian companies are our clients. These are the clients we work with. They can be a buyer or a seller with TradeRiver. So in other words, we can do the purchase order finance or the factoring receivables, and for them, we work with importers and exporters, manufacturers, wholesalers, distributors, e-brands, and other types of brands, e-commerce, freight forwarders, just to name a few. We're very industry agnostic. We can pretty much go anywhere. What we're looking for in the client company is an experienced management team, a company that knows what they're doing when it comes to trading. Even if that experienced management team has a startup entity, as long as they have a good track record and they've transacted, we can still work with that company, even if it doesn't have a great deal of net worth built up. So startups are okay. The typical revenue is between 5 million and 100 million. We have clients that range anywhere from 2 million to $500 million or more in annual revenue. And the transactions that we fund, once we've given a client a facility, which can range from $250,000 up to $30 million, the typical transaction sizes are going to be between 100,000 and up to 5 million. We do have clients that do smaller transactions, $20,000 or $30,000, but we tend to really want to see a larger transaction in that 100,000 to 5 million. We want to see a revenue cycle from when they make the first payment to their vendor through when they get paid, or they can cash out in the 30 to 150 day range. We can go longer than that if we combine our programs. As I get further into this, I'll explain what I mean by that. We're looking for gross profit margin 20% or higher, and clients, as I said, with A, B, or C credit level are acceptable. We want to make sure they do have a good management team. Clients, end customer, end buyer, if we're relying on the end buyer as the takeout, we want to see an A+ credit. That could be a blue chip company, a government entity. It could be a very strong SME, small to mid-sized enterprise. So how do we work with partners? We like to, first, we want to get to know your company, make sure that we're a good fit for what you're looking to do and for the kind of business you're looking to grow. Once we see an opportunity together, we will work with you, onboard you as a partner on our STEPS platform, and you will make referrals to us through of your clients. We are very hands-on. We'll work very closely with you and make sure you understand what how our program works and the benefits and advantages for your client. So initially, a partner will make an introduction, a referral. We'll do a preliminary review. A lot of times we'll just pull the credit reports that we have access to on that company. Maybe we'll have an introductory conversation with you and your client, or just your client, so we can get to know, get familiar with what their needs are and what the company looks like. Once we think there's a fit, we'll collect financial documents. That would be the company financials. In many cases, we'll ask for the the ownership financials as well. And then we want to understand their trading cycle, how they work with their vendors, when they have to make payments, what kinds of terms, et cetera. So we want to understand that supply chain. Usually within 2 weeks of getting a full submittal package, we're able to get a credit approval, have a term sheet, and then onboard the client on our STEPS transaction platform. So the client will enroll as a buyer and also as a seller if they are in both our buyer and seller first program. They will be able to then transact as a buyer with their seller, their vendors, anywhere in the world, to execute complete transactions, lock them down, create a payment obligation on the platform, and we will fund that payment obligation within 24 to 48 business hours. So there's a very efficient process once the client is completely onboarded and enrolled. The 3 programs that we offer for clients are our trade finance program. We've also referred to it as our supply chain finance program, or our buyer plus seller first program. Okay, not trying to confuse you guys, but think of the buyer program as a purchase order finance program. That was our bread and butter for a number of years. We rely on a very strong A credit client for that standalone program. But when we do it in conjunction with the seller first program, we call it our trade finance program. We can then do A, B, and C credit clients as long as that end buyer takeout, that receivable that we have as our security, is a strong entity. And it gives the client the advantage of being able really to fund the end-to-end supply chain, to fund that earliest supplier payment to their vendor. They might have to pay 30% or 50% deposit when they enter a purchase order. And they're trying, essentially what starts the process is the client is going to get let's say they get a purchase order, a large purchase order from one of their end buyers, a strong company. It could be Walmart, it could be Costco, it could be just a small SME that has very strong credit, where we can rely on that receivable as our takeout. So to get that large PO, they need to start production. So they have to place an order with their supplier, with their vendors. So how are they going to fund that? They may have to make a 50% deposit up front to that supplier. We'll fund that and give them up to 120 days to repay. So once that invoice is accepted, that's the takeout. So as long as that happens within the first 120 days, we will fund that takeout of the buyer program, and we can continue to factor that receivable from the end buyer. So the client would, in that case, typically we would fund 90% of that final invoice from the end buyer, pay down our initial investment, take our fee, and pay the balance, the profit, to your customer. So your customer gets paid out, and we're holding the receivable until the end buyer customer, the client's customer, finally pays us at the end of the process in step 5. So that's in a nutshell how we work. We do need to understand the complete transaction cycle quite well. We have to look at the purchase order from the end buyer, and we have to see the purchase order that's being issued to the vendor, make sure the product's going to be manufactured according to spec, and that we have the security we need. In other words, there's shipping insurance, there's cargo insurance, the chain of custody is clear. We've got a third-party inspection company that certifies that the manufacturer is able to comply with the specifications of the end buyer. You don't have to worry about any of that stuff. That's all the stuff we have to worry about. But it's what makes TradeRiver unique, in that we can fund that end-to-end supply chain just on the basis of understanding that transaction cycle, the documentation, and that end buyer credit strength. The other thing that makes us unique is our STEPS transaction platform. It's a trade finance platform where all of the steps of a purchase and sale agreement, from the initial purchase order being entered through the dispatch of the product from the vendor to the client accepting the goods, receiving the goods, and then accepting the goods, and the payment obligation issuance by the seller to the buyer, and then acceptance by the buyer of that payment obligation, creates an instrument that can be insured, or it gives us a high level of confidence that there is a real transaction. It's been executed cleanly between the buyer and the seller. Every step has been digitally signed and certified, so that both parties, in a true sense, have locked down their transaction virtually in an online platform without the need to generate all kinds of paper documentation. Clients can upload their own documentation to the platform, but this gives them a tool to very efficiently administer their supply chain, and we call it really the automation of the supply chain between a buyer and a seller. Partners also on board on our STEPS platform, and they will get access to the partner portal where they can track commissions and see what's actually going on, with the transactions that their clients are executing. So when it's time to be paid. TradeRiver, as I mentioned at the beginning, is very partner centric. Partners are the lifeblood of our company. So we really appreciate what our partners do. And I want to thank the partners that have joined us today that are already TradeRiver partners, and welcome anyone else that's interested to consider joining the TradeRiver team. We like to have fun. In 2019, we did a partner getaway and had regional roundtables. And we're going to get back to doing that again in later this year and into 2022. So that the partner enrollment process, we call our partners introducers. So if I'm using that term, they're interchangeable. First, we'd like to have a conversation with you, Chuck or I, or one of our team members. We'd like to have a conversation just to understand that, you understand our product, and you're really interested in pursuing a relationship and building a portfolio of business with us. Once we have that initial conversation, we'd love to invite you to register and enroll on the STEPS transaction platform as a partner. The enrollment process is all done virtually online. We'll send you a DocuSign of the final agreement, the introducer agreement, and the registration enrollment form. And so it's a very clean process. And partners will, as I said, gain access to the partner portal where they can track linked clients' transactions. You can see when transactions are coming due and what amounts of commission. We will then email you when your commission, when it's time to invoice, once a CPO, that's the confirmed payment obligation, has been paid down. We'll email you and ask you to send us an invoice. Once you're enrolled as a partner, we'll schedule an in-depth partner development webinar, and just to get the ball rolling. And then we will work very closely with you to make sure you understand trade finance and the product that you're selling to your clients, and what the advantages are. But as I said earlier, the market is massive. You guys are doing maybe equipment lease finance. You're doing commercial real estate. You're doing a number of other kinds of finance, even perhaps factoring, lines of credit. You're working with banks, but supply chain finance and trade finance is a massive opportunity. So anytime a client is looking to grow their business, and you've experienced it in your own businesses, perhaps, many times there is a working capital crunch. So some of the key things they're looking for are growth funding, inventory finance. Clients may be looking for purchase order finance, but they're looking for a vehicle to grow the business. They may come to you looking for working capital, but this is a great way to fund that supply chain to get to the next level, and it won't interfere with many of the other kinds of finance that are out there. So just to give you some idea of some of our success stories, we have a client that recently that we signed up for a $32 million revolving trade facility for medical equipment and supplies. They were awarded a large government contract. And then through TradeRiver, we did our combined buyer plus seller first program, our trade finance facility. Typical transaction sizes are 4 million. So this is on the large side. We don't do tons of these, but this is one of the examples of a very large facility. This is a more typical facility. We have a client in the LED supply, an assembler and an installer business. And we recently gave them a $5 million facility, and they'll make purchase transactions of in the neighborhood of $750,000 on average, with a 90 to 120 day credit period. So,
John, I'm sorry to interrupt, but I think it's important to point out on this relationship. This came to us from a lessor who's been doing their leases of all these signs, and I was just talking to him about TradeRiver. I mentioned to ask this client how they finance their inventory from the start of the supply chain. And they had a bank line that we worked around, got a carve out, and we've added their ability to acquire and satisfy the heavy demand of their product. And our lessor was able to pick up additional lease business, and now he's more ingrained with the business, because not only does he work with his client, the vendor, for leases, but they also look at him as a person that to provide supply chain financing. So he's more involved in the company than ever before. The key with us is to build a portfolio, not just one transaction. So now that this lessor is understanding what we do, he's taking it out to some of his other vendors to develop other relationships for TradeRiver. And it really has a tremendous benefit with his relationship with his vendor. Okay, John, thanks.
thank you, Chuck. That was very good. Thank you. So that was one example. Another example, and Chuck, you can interject on this one as well. We have a client who's a high-end specialty coffee importer of green, the green coffee beans. And they import from around the world, from Ethiopia to Colombia to other parts of the world. And then they sell to very high-end coffee roasters across the US, Canada, and even in the UK. And we met these folks at the specialty coffee show in Seattle, and actually Chuck met the gentleman out there, and they used the facility to purchase containers. A container runs around 200,000, and they'll purchase the product, bring it in, and as I said, distribute it. Typical credit terms that they use are 90 to 120 days. So a partner can make, on a transaction, can make on each transaction on an ongoing basis, can make a couple of thousand or more dollars. And so if there are 3 or 4 transactions like that are going on an ongoing revolving basis, a partner can just with 1 or 2 accounts can start seeing some real income. But then you build a portfolio of half a dozen or more clients, and you really have a very nice annuity that you can kind of rely on to grow your business. Another example, we work with a luxury spa equipment manufacturer that sells to a large national, he manufactures for a large national brand brand name, and he purchases the spa equipment. They have a $2 million facility, and they typical transactions are 500,000. They will use the facility on an ongoing basis. Normally, the credit period they use to repay or pay down the facility is 90 to 120 days. And this is a standalone buyer program, so we don't have the account receivable on the back end. So we're not relying on the end customer payment. So this is a very well-managed company with strong financials. We do get monthly bank statements and keep abreast of how their finances are looking. But that's an example of a pure really purchase order finance program without the receivable to back it up. We really appreciate your time and attention today, and I'm going to open it up for Q&A. But before I do, I just want to say that we're really looking forward to seeing you all at the AACFB in Nashville in 2021. We're really excited to be back in a virtual world again, as the last year has been challenging. So if I see you in Nashville, I hope I can buy you a drink, and Chuck and I can get to know you a little better. Monica, do you have any? Can you see if there are any questions for Chuck and I?
I don't see anything right now, but as I mentioned at the beginning, there is a Q&A box that should be on the bottom of your screen, and you can type in your questions there. Or if you prefer to verbally ask your question, just raise your hand and I can unmute you.
Okay. Well, Chuck, maybe you can interject some additional insights.
Let me just take a few minutes. TradeRiver product is very needed in the U.S. and Canadian marketplace because we satisfy the client's needs to acquire goods when they have a huge increase in business and their bank won't keep up with a revolver for them to satisfy their acquisitions of the inventory. But that's where TradeRiver fits in. We want partners to work with us. We have a very good training program for our partners because the idea is to build a portfolio. Your recurring revenue stream from TradeRiver, as you build that portfolio, becomes a very meaningful part of your revenue for the company and even for a retirement. We have one lessor is putting it in his retirement funds. So it's a good program. We're here to work with you closely. I know a lot of you are used to app-only credit transactions. We're not that, but we are hands-on to work with you on building a good financial package that we would need to fit it into the right program that we offer.
Actually, I found some Q&A, and I'm gonna drill into that. First, I have a comment from Jack. Thank you, Jack, for your nice comment. These guys have been great to work with. Amazing platform. I really appreciate that.
We do have Julius Talley has his hand raised, so I have unmuted him. If you want to start with him and then do the Q&A. Julius, can you speak? I don't know if we can hear you.
Let's see. Can you hear me?
Yes.
Yes, Julius.
Okay. Wondering if you can see. Okay, let me see.
We can see your picture. We
You
can't
can
see
see your picture.
Okay, let me just ask the question. You had mentioned that you didn't need some AR or factoring company to take you out on one of the transactions. Of an example, do you usually need?
We don't need a factoring company necessarily, Julius. We can take an assignment of that receivable. The important thing is we have to make sure that we file a UCC-1 on that receivable so that we have security over that particular invoice. So we, in some cases, we may need a carve out with the factor, or whoever has the security over the receivables. So in that instance, we do like to work with factors to provide the front end purchase order. The factor can do that receivable end and take us out on that front end. We just do an intercreditor agreement.
Okay.
Did that answer
Okay.
your? Okay.
Yep.
Um,
And there's a second question. Is there an industry that you stay away from? Or should I just ask you about a couple of industries? What would be easier?
Why don't you let me respond by saying, yes, there are industries that won't fit because of their margins, mostly your commodity industries where their margins can be 1-2%. And it could, it's unable to predict what their margins will be because the commodity trades happen a lot.
Okay.
So it's very important for us to make sure they have gross margins of 20% or higher in
Okay.
order to be able to fit into the program.
Okay. So construction may not fit then.
Well, we've actually worked with some solar construction companies where they've actually have good margins, but it's important for us to understand their work in progress timelines and the contract they're under so that we know how their cash flow works and how they get paid for each component of the construction job.
Okay. Go ahead.
No, I said construction's possible as long as we understand the detail of their work in progress and the cash flow of that.
Okay. Because there was a gentleman that reached out to me just today and asked about assistance from selling construction material. He buys it and then it ships it to or periodically retains it for the client, but he would buy the construction materials, several $100,000 and then ship it to the site. So it's most of the time he doesn't touch the merchandise. So I don't know what his profit margin is. That's the overriding question, is to make sure he has
that's one of the things you would need to find out, Julius, so that we could, but that's part of our guideline, the 20% or higher gross profit margin. So there's some other questions I want to make sure we got to.
Okay, thank you.
Thank you, Julius, so much.
Julius, you can call us back and we'll drill down more with you on that.
Okay, thank you, Chuck.
Thank you.
Please be in touch with us. So Sheldon asked, do you finance deals that originate overseas that seller is selling to the US? Yes, that's a very good application of what we do is the import side. We will fund the US Canadian company that's purchasing the product from overseas. And it can be secured by the receivable of that client's US or Canadian end buyer customer, or it could be secured by their own balance sheet. Thank you for that question. And then John Paul asked, can you elaborate the interest rate to charge the client for transactions and the benefit versus bank credit lines? So what I would say is TradeRiver, being a non-bank online funding facilitator, is much easier to work with than a bank. We don't tie every asset up and make it, we don't have dozens of variable fees. We have a single transaction fee for each transaction. So a client is given a very transparent fee, and it's for an for those transactions that they choose to use TradeRiver to fund their supply chain. So they're only paying for what they use. Their fee is very transparent, and it's only to fund that growth period that bridge period that they need the funding for. We're funding the highest risk part of the supply chain, which is the pre-invoice, before the invoice is accepted by the end buyer, unsecured section of the supply chain. Then we're using that invoice to take out the client. So our factoring fees on the back end are lower than our purchase order finance fees on the front end. but that purchase order part is a real specialty. And the fee is gonna vary depending on the size of the transaction, the number of days in the transaction cycle. So if a client is using the facility for the full 120 days, it's gonna be slightly lower than it would be if they're using it for 30 days and they're using a smaller amount. So if that makes sense. And we can drill down in more detail offline if you'd like to get into the specifics of our fees.
John, I think it's important to point out it's not an interest.
Right.
Okay? It's a transaction fee based on the risk assessment that we apply. The purchase order side, when we advance money to acquire the goods it could be a domestic trade or it can be an import of goods. In domestic trade means that it's US to US company. And it depends on how long the money's out, how much is needed. It's the higher risk of the program. So that transaction fee will have a higher price daily per diem, somewhere around 3% per month. Could be higher, could be lower, depending on the facts. And then the seller side is the lower risk of the programs because the goods have been shipped and received to the end buyer. And so the seller or factoring will be dropped by about 100 basis points from the buyer side because it's less risky. But it's a transaction fee that encompasses everything, not just the cost of funds, but wiring fees, setup fees, documentation fees. A lot of our competitors have all the extra fees stated. We don't. It's all dictated on that one transaction based on the amount, like John said, and the term they pick. But on the platform, they'll see exactly when they input a transaction, they'll see exactly what the cost of that trade will be so that they can dictate if that's good for them or not, or they could shorten the term, or they could shorten the amount they need. We have some buyers that will actually put some of their own equity money into a transaction in order to lower that, or that they keep their lines moving with their own cash as well. So it's a very flexible program when it comes to the cost. And each trade can be different. So you can't look at it as an annual interest rate because each trade's different. It all depends on the amount of money and how long it's out and what the end buyer is as well. So if you'd like, as John said, give us a call and we'll drill down more into it. John Paul, appreciate it.
Now, there's one more question, Chuck, that I'd like that came from Nick. I have a client supplier of coffee beans, rice and grains, etc., from Africa requesting the finance for his clients in US and Canada. Also an importer in Canada and reselling. Lately, his shipment experiencing delay and go over 30-day in transit. How can you help this situation? Is there a minimum invoice limit? So Chuck, I'll let you go ahead and tackle that one as well, if you will.
Okay. If I understand, there's a lot of questions in that one. Could you just read that one again, John? Let me.
There's a supplier of coffee beans, rice, and grain from Africa requesting the finance for his clients in US and Canada. Mm-hmm. So the seller is looking for finance for his clients in the US and Canada. Also an importer in Canada and reselling. Lately his shipment. So the Canada importer who is reselling is a no-brainer. The Canadian company can be our client. That we can work with them provided they meet those other criteria that I outlined during the presentation. Now the exporter from Africa who's selling to the US.
Okay, I can handle it.
Go ahead.
Okay. Here again, with rice, we have to look at the margins. That's a commodity price product. So we have to understand exactly their margins on that. And we have to look at their company. Are they the producer or are they a co-op? Or are they a consolidator of the goods shipping it out? We have to drill down on that. And we would have to look at their end buyers here in the US. Who are they selling to? Or, in the coffee, is it a roaster or is it retail? Who's the end buyer? And on the rice, it's It's really the key on that is what's the margins? What type of margins they're going to have. The coffee should be fine if it is from a grower or a co-op. Coffee usually has a fairly good margin in it, and it's more stable. So we'll have to see on the rice is the fluctuation of the pricing and margins.
Okay, I think that wraps up all the questions, unless anyone has any last minute question to add. Monica, I want to thank you very much for putting this on and for the AACFB. Chuck, thank you for joining us too. And anyone who's attending, please feel free to reach out to Chuck and I. If you have I believe you have a copy of the presentation, our contact information is there for you, or you can just find us at TradeRiverUSA.com and reach out through the website. Thanks again.
Thank you. I want to big thanks to all our participants and especially our valued funding source and gold sponsor, TradeRiver USA. Thank you for a great job, everyone. We invite you to meet with TradeRiver in person at the annual conference coming up this September in Nashville. Thanks again and for joining us, and have a great day. You can watch this again if you need to on the AACFB website. So
Bye, everybody. Thanks.
thank you.
Thank you.